Hey folks, welcome to Market Technical Correction Analysis by InTheMoneyStocks.com for August 23rd, 2007. Well, what a day again it was in the markets, and we continue with this light volume trading, but today we saw a little different face of the market. We saw a little hesitant market, a little bit of a reversal in the market from the gap up on the Countrywide news. That was very, very interesting today. Those of you guys that knew about the Countrywide event yesterday, around 6:15 in the evening yesterday, Countrywide came out with news that Bank of America had actually put $2 billion into the stock, the Countrywide, to buy up a lot of this debt, to fund it basically, to help bail it out, if you would. And their investment of $2 billion initially shot up Countrywide stock. Humongous. We're talking about Countrywide stock trading as high as $26, $27 after hours yesterday. And the futures at that time spiked up 10 points. They just took off in one candle after hours, guys, between 6 and 6:15 around. The futures spiked up 10 points here. And the question is, well, okay, we got to spike up. And all stocks got a bid instantly. Bids came in. Juice. They raised the stock prices right after hours. And what did we see? Well, we saw continuation of this up till about 7:30 this morning. Around 8 o'clock this morning, the futures started to fade. And we saw the futures fade from ever since the Dow was up over 100 points. The futures were up on the Dow over 100 points. And then by the open of the market, the futures were only up 50 points. And then slowly throughout the day, what happened? We saw this gap up and a crap out. And that's called a gap and crap. That's our term we use for it. A gap and crap, meaning we gap up and we just fall straight down and go negative. And that's what happened, guys. And really, the morning was the best for day traders out there. Those of you guys that you can associate with what I'm talking about here. You guys know the morning was really the best time because once we got after lunch, we kind of got to move up or move down. And we kind of got in a channel. And I'll show you guys the channel overall. All right, folks? But here was the best plays overall. We got great shorts on RIM. I've been talking about RIMM, Research in Motion, as being a great short play over the last couple days. Ever since it split and ran up huge into its split, 3-for-1 split, it's been a great short play almost every day, gapping up and then just crapping out all the way down. And that's exactly what we saw on the RIM chart. I'm going to show you that quickly here. Here's RIM's chart. Basically, anywhere up here, it's gapped up, and it just sold straight down here, this whole way down, guys. And you can see that right here, that little trail off right there. Just a wonderful thing. Also, you know, there were great shorts like Apple out there today. Apple here gapped up and just fell down. And other stocks, obviously. Countrywide's probably the best one right here. Look at this chart, guys. This was supposed to be amazing news, but it got to make you think here, guys. Bank of America is putting $2 billion in, and look at what happened to the stock price. Gapped up huge, and remember, yesterday after hours, it was up even more. This is 24.50 where it opened about. It was up yesterday after hours as much as 26.27. Anyways, today it gapped up to 24.50 and proceeded to sell all day, closing up 20 cents. And I want to just show you guys something interesting before I get into today's market on this chart. And you guys know I like to talk about how key different technical tools are. And everyone should know by now, or I hope if they don't, you guys will learn what a gap fill is. All right, when something has to fill a gap, wherever it gaps up, like a stock price gaps up here, and they talk about filling the gap, they mean the stock price needs to come down and fill it all the way to the closing price from yesterday. See this point right here yesterday where the stock closed? That's called a gap fill. Okay? And the question here is, all right, are we going to fill it? And you wouldn't think we'd fill a gap. When a stock gaps up $3, $4 here, that's a big time sell if it fills it. But look at what happened, guys. All day. All right? And what do you guys think the low is right here? Exactly the low. 21.82 was the exact, to a penny, the gap fill there. Just a very interesting tool, guys, to realize that gap fills happen. The low of the day was 21.82. What did it close yesterday at? 21.82. And it closed a little over 22, so you got a little bounce off the lows here, as you can see, a little trend up from those lows. In any case, folks, just a very interesting observation there on noting how key gap fills can be. And you can always look for those fills. If a stock gets within this far of filling that gap, and let me take that line away so we can see, at this point, you know it's going to come down and fill that gap. It doesn't come down this much, only not to have the technicals turn in to fill that gap. So a lot of times, you can take that short right there and get this little area right here for a gap fill and make some nice money. All right, and some people did, I think, in the chat today. I'm not 100% sure, but I'm pretty sure people took that trade. Great trade in the chat today. We had a great day in the morning in the chat, especially. The afternoon, again, it was a little slow in the choppy trade in the market, but the morning was just phenomenal. All right, let's look at the NASDAQ chart, guys. We talked a little bit about Countrywide, and I hate to bring it. Let me just go back to Countrywide, guys. I just want to point one more thing out. The volume on Countrywide was 150 million shares today. 150 million shares traded hands. Don't think up here the big boys, the big institutions are unloading this stock, guys. All right, let's be realistic here. When there's that type of volume in a stock, the institutions are unloading big amounts here. And you often wonder, well, what was the reasoning behind, a $2 billion infusion? When you know the institutions are unloading here to the average investor, because this is the trap again, and this is why it upsets me to know that this happens in the market, because I'm a big fighter for the little guy, and I always like the little guy to win out, because the big guys already have a ton of money. They don't need more money, but they're the ones that are making the money. So right up here, the market opens, right? Let's say that stock price is trading in this range up here. Who's buying? All right, the institutions aren't buying there, guys. Trust me on this one. All right, the institutions are absolutely not buying. It's the little guy. It's the average investor who hears about this and says, "Oh, let me go buy 500 shares in my Ameritrade account, in my E-Trade account, in this account, in that account." All right, this is what they're doing the whole time. You probably have big boys unloading, hedge funds, big guys all the way down, and it's just a shame, but it happens. All right, we understand it. The keys to the chat is I make sure everyone understands these games that are played, and we go forward. All right, going back to the NASDAQ chart here. This was a great short all day right down to here. We got a little bit of a bounce here and a retrace. Nice double bottom there, guys. And that gave us a little buy signal all the way up here. But at this time, we touched the 50 moving average here to the upside, and we failed, came down. In the afternoon, again, you see this little choppy trade. This is called chop shop, all right? This is where you really can't play long or shorts in the market because it goes up a little and then it comes down and you get taken out. Or it goes down a little and then it goes back up and you get taken out if you're on a short side. All right, so again, that's a signal. Ever since right about here on the double bottom, you can play this move up, but after that, that's it. All right, folks, that's it on the chart. You can't really play that intraday. And again, I'm talking from a day trading perspective, but even on a bigger time frame, you guys should look at this. When you're looking at a daily chart of Microsoft or Intel or Google, it's the same thing. When you see chart patterns like this, you have to understand what's going on. All right, you look for double bottoms. Double bottoms are great, and then you go on from there. All right, a little more analysis on here, guys. I want to just clear some of these lines out of here so we can actually talk. Now, how did we know where the market was going today in the chat? Because we talked about certain key support lines in the market, all right? And these support lines helped us understand exactly where the market was going. What did we see? We saw an initial sell down here and a bounce, all right? Now, the reason why we talked about a little bounce here in the chat was because you have so many negative bars, all right? When you have a certain amount of red bars on a chart, just naturally, you're going to have buyers eventually come in and push that up. Now, what happens when you get that initial bounce? Well, we got a retrace down, and we got a little bit of a double bottom here, okay? Here's the double bottom, okay, right there. All right, double bottom. We got a little bit of a bounce off that double bottom. The first time that candle closed, and you see the little bottom here? See the bottom half red portion right there underneath that green line? The second that closed below that line, that's a short signal to go short there, all right? At which point, you go short, you don't get too greedy here, and there's no real moving averages below, so you really only have this moving average, the 200 down here. But in any case, you go short for a little while, make some money, all right? The next spot, you get the bounce, another double bottom, all right? At that double bottom, if this double bottom here doesn't get taken out on the downside, as it didn't, see, no close below this line, even though there's a little dash there, but it never closed the candle below, then that means that you got to look to the long side. If it can't break down, it's got to break up. That's the philosophy, guys. All right, keep that. All right, that's the NASDAQ trading. Again, once we got into the afternoon, ever since like 1 o'clock, there was really, ever since here, you could play the up move here, but really after that, there's just chop shop back and forth, back and forth. The NASDAQ ended down a little bit. The Dow ended basically flat, as did the S&P. Now, let's talk a little bit about the ES here and the market. Now, you guys know what we've been talking about for a while, guys, all right? We've been talking about how the market had to make a move up. Okay, we're looking at the NASDAQ chart now, and we're talking about how the market needed to make a move up from down here. Once we got this candle, and this is, you guys should be used to these calls by now. I go over this every couple days. This was a buy signal to go long. We said at least get to the 20 moving average. That's where it was. Yesterday in the video, I said look for a possible still sideways trading to up. And today we got basically a flat day, although it was a gap up and then a crap out, so it looks like a red candle there. But really, the NASDAQ was down 11 points, and the Dow was down something like 2 points. Really non-event. We're still, even though we're near the next move down, we're not sure if it's going to happen yet. All right, this is where it gets very gray. For the most part, the way I look at it for myself, I think I should mostly be in cash right now. All right, we knew it was going to go long here. Once we got up to the 20 moving average, that's our signal to lighten our any long positions up strongly. Okay. And at this point, if you still want to be long a little bit, or if I want to be long a little bit, I might, but for the most part, I've sold out my longs by this point, and I'm now just holding a little bit long and getting ready to look on the downside to start accumulating maybe an ETF 2 times short or something like that. All right. Now there is, again, we're talking possibly a move up, but not a big move up, just kind of like a sideways move up. You know, a sideways move trending up is the best way to put it. A sideways move trending up. All right. That's kind of like this motion right here. You're not looking for this motion. You're looking for this motion. All right, folks. Just to give you guys an idea. Alright, so that's what we're looking for in the next coming days. We'll keep track. We'll update you guys tomorrow's video on Friday afternoon. Have a wonderful evening, guys. We'll talk to you guys tomorrow.